Welcome back, fam. Day 2. Today, we're going to go over the rectangle tool that I did not go over yesterday because there's a lot of information to unpack with just that one tool. So let's hop into it. So just for quick reference, you could see that this is exactly what we use them for. We have a volume inversion, and I use red, fair value gap, white, and orange for inversion fair value gap. Candlestick 1, candlestick 2, candlestick 3. It's a 3 candlestick formation. This middle candle, this is the purest form of imbalance in that algorithm. It's created when one side of the market is skipped. A strong candle moves so fast it leaves unoffered territory. And that is here, directly underneath this third candlestick. We mark it using the 3 candles, okay? The middle candle is the candle that displaces, all right? That is where we're looking for entry points. Entry points on the 50%, entry points on the entry, the start settings. This is where you get the middle line. That is your for sure 50% consequent encroachment. That is the zoom in. That is what the algorithm often rebalances to. This is not a zone. This is memory. And price will tap it when it wants to reset before moving on. We don't chase the move, okay? We wait for price to return to memory, then we strike, okay? So let's go into a little more detail because this is just one version of the fair value gap. This is a bullish fair value gap. Candlestick 1, candlestick 2, candlestick 3. And then this gap in the candlestick 2. This is an imbalance. And you can see what the market does. And go anywhere, but I'm going to just go right here. This is a bearish fair value gap, to say the least. To simplify terms, this is actually sell side imbalance, buy side inefficiency. It's a SIBI. Okay. And then this one is the opposite. It's a BISI. It's a buy side imbalance, sell side inefficiency. So it's inefficient on the sell side, and there's a buy side imbalance. And then vice versa here. Here, there's a sell side inefficiency. See how it goes selling? Candlestick 1, candlestick 2, candlestick 3. That's sell side imbalance. And there's buy side inefficiency. There's a lack of buy side, okay? And same exact area. You see this gap? Here, this gap here between the body to body. This gap here. That is what we refer to as a volume inversion. See the gap between the body? So here's the body right there. You see it? Right there. And then there's the body up there. That creates volume inversion, okay? And then a step deeper is that the volume inversion, we take the volume inversion, right? And then we go to the third candlestick, right? Make sure there's not another volume inversion right there, right here. Right. So extend that over. And look what happens. This is what happens. Fair value gap gets traded to, and it's going. It looks bullish. But then the market does something like this. It trades lower with a full body close and continues lower. That is where this turns inversion. Inversion just meaning the opposite, all right, to really simplify this. It's the opposite of a regular fair value gap. It has now been traded through and is now switching dynamics. Okay? And then the volume inversion, always use those as like the weakest link. So on any time frame, for instance, if you just see a volume inversion, don't be like, oh my God, 100% sure model and rapid fire. Like, no, wait, because a volume inversion with a fair value gap, that is power. We'll go over today, for instance, because I always use a 15-minute chart. So before the market even opens for the day at 9:30 here, I will be looking left and like trying to track out and trace out any potential price points that the market might be willing to fill and draw to. So there's this consequent encroachment price here in this gap. Okay. And then you could see we got this fair value gap here. That's a bearish, that's a SIBI. But later it turns into what? Yeah, you can see that. But we'll mark them out, look left, see what we could find. And then just literally, so for instance, it would be like there's this one here. See the bodies, so respect it. The bodies are so respectful, but the wicks do all the damage. Look at this wick down here. That's doing all the damage. But the bodies remain above this fair value gap here. So that's bullish. Target your buy side, which would be right there. Buy side, sell side sweep. There's that fair value gap. Drop down to a 1 minute. See the sweep. Volume inversion. Fair value gap. Traded above. Inversion. Inversion into relative equal highs and or your 15-minute imbalance. So relative equal highs from the 15-minute or your 15-minute imbalance. I mean, we could have sniped down there on a 15-second chart, or you could get this entry here. You will see this clear as day on a 15-second, but we need to grow into a 15-second chart, okay? We strictly work with a 15-minute and a 1-minute chart. That's all we need here. You don't need anything else. You don't need any other chart. No more time frames, nothing. You simply need the 15-minute, because you already knew price was drawing back up here. If you had that marked, and if you, there, I'll go a step deeper for you guys. So we have Sunday open, new week open gap. Measure your new week open gap, okay? But look at here. Fair value gap, bodies, look at the bodies. Wicks doing all the damage, okay? And then get this one right here. See this fair value gap? Fair value gap here. Look at the bodies. See how the bodies traded to it? And then what they do? Dropped it back down to that 1 minute. So you can see I traded down here. Sweeping. It's swept sell side. Okay. There's inversion fair value gap. I think there's a volume inversion there. So that's your imbalance from your 1 minute. And then you can see what the market does. mean, there's your breakaway gap to be true. But every day, this shit is like clockwork, bro. I promise you. This is literally the simplest formatting to a trading model, I believe. So there's a breakaway gap. There's your entry, but you probably wouldn't have even been able to get that fill, in all honesty. So the next entry would have been up here. And then your target, that 15-minute. See how the bodies on the 1 minute? Look at them. And then look what the market does. Right back down to that weekly. That red line is the weekly gap, and then that fair value gap again from the 15-minute. And then look what it did this time. Above this previous one. And look what it left at that point. It gave a fair value gap, implying strength moving higher. Boom, boom, boom. And then it goes into this accumulation state. See accumulation? In a short story, that is in essence fair value gap, volume inversion, and an inversion fair value gap. So just honestly, like, leave a comment and I will reach out to you. We could exchange a form of, I don't know if you could DM here on YouTube or not yet, but they need to make that a thing. Y'all could add another social and then contact me, and then we could get rolling together and actually get this shit fucking fired up. But just honestly go through, practice finding the imbalance, because this is the fair value gap. See it? And then like just see what happens. See how it never filled. It never gave an entry. Because if you were to +1 tick right there as an entry, you never got filled. Market runs up buy side, run on buy side here. Go left a little more. Get your constant encroachment on that wick. Boom. See this wick here? From Tuesday the 17th of June at 12:30. Consequent encroachment, extend over. Boom. That's your inefficiency. Oh, wow. What was this? Market open? Wow. Okay. Manipulation. On a 1 minute bias, first present inversion. Trade low. It offered you a fair value gap with a volume inversion. Volume inversion, fair value gap. That's big. That's a big boy. Look how big. That's a lot of ticks. Again, it comes down to tickage too. Like, I will not use a fair value gap if it's like 12 ticks or less. Normally, it's like 26 or more. Normally, on average. But retrospectively, there's your short -1 tick off of that volume inversion. So 1 tick below. Boom. Stop loss at the high. And then your target is going to be that 15-minute imbalance. 10 o'clock, 11 o'clock, silver bullet, drawn. So there's just one example in the moment markup. And let's hop back to the 15-minute real quick. That was perfect. Here's it on the 15-minute. So right back to the imbalance, this fair value gap. So yes, more to come, more to dive into, more to learn, more to study, and let's go, fam.